Yo people, so today we're gonna talk how do you get sniper entries. And there's mainly two ways. I'm not gonna talk about basic shit, all things that you might find. I'm gonna give you some sauce. Well, the first one you might already know if you trade ICT is the OTE. So the OTE is like optimal trading entry. I don't know exactly. I'm not an ICT trader, but essentially you get your fib out and you mark these three levels being the 0.62 the most important. Normally, when you have a breaker structure and when price is retracing, normally price will come to these levels. Is what we can see most of the time. So the 62 is the most important if you wanna map it out in your fib retracement. But these three are also good if you wanna know if you're being like a little bit too aggressive on your entry. Let's say you have your point of interest, right? Your order block. And let's say you want to enter here. So with the OTE, and you already see 2 pip stop loss. The OTE will tell you like you're finding your entry too much. You're being way too aggressive, and price is not just gonna come in. Like having this big of a risk reward is cool, but most importantly, guys, we want to be in the trade, so we don't want to miss the whole move. So you place yourself right here. That's cool. You're in the move. Sniper entry, meaning that you almost have no drawdown to the trade. Trade just tags you in and goes. Moving on to the next, the inducement. So this one is a must for me in my strategy because OT is like a confluence is like a complementary tool to the strategy. I use it just to see to see if I'm refining too much or where can price head, but it's not a must. But this is almost a must in my strategy. This is if you go check my trades, I always place myself like this almost all the time. So what you're gonna see is price doing a breaker structure and leaving like a small, in this case, lower high to trap more traders. This way, when traders come placing themselves early and aggressively, take their trades like this. Price gonna impulsively take them out. So they stop loss, and we come here and trade like this because we're just gonna get a week to take people out, get their lots, and push down back again. And we place our stop loss in the protective high, and that's basically it. Because this low took out liquidity, but this one didn't take shit. So that's why we place ourselves like that. And the best way you can do is use both of them. So like let's say you did this. You see? Perfect. So this is all cool and all, but let me show you some examples in the real market because theoretical shit is all cool and all, but let me show you examples in the real market.
Yeah, just look at this shit, by the way. This is like we had building permits just now. I had a trade like this, and yeah, I wasn't tagged in for less than a pip, less than half a pip, which is crazy. But yeah, we got the inducement right here, and I was trying to take this. But yeah, let me go find some. I don't know if you guys are going to tell by this, but because this is a 5 minute. But if I go low down on the 1 minute, you'll see that we did an inducement right here. Price was breaking structure and then come again, just wick, and then come lower. This was the CPI trade. I did a video on, by the way, how I catch this 8R trade. You can go check it. It's on my channel. It's like the first video. And yeah, you can see price just wicks it and it comes lower instantly. No drawdown whatsoever, just a little bit, but it's like instant profit. And if you can see, okay, this wave was way too aggressive. It was on 5 minutes. But if you wanted to get a re-entry, You could do it here. Hold on. Yeah, almost touch it. Almost. But this is like a specific case. If we do something right here, you can see from here to here, price came to the OTE and dropped. If we come here, you can see from this high to this low, prices came to the area of the OTE and dropped. From this high to this low, can retail price came to the OTE, just wicks and dropped. So this is the mathematical sense around it. And if I show it inducement wise, you can tell there's these inducements right here. Price takes this out and you short it here. It's not a good movement, but yeah. Let me find something better. This here could be a good example. You have price coming to the OTE levels. You have this inducement right here to get taken. That was stuck. And it was stuck right here as well. So this is like the following money method. Like you're following the money so you're following the liquidity basically. Because you see, we have this high that formed this low. We came to the OTE level. We break inducements that were not protected. We picked them up. We continued the trend. Now we have this zone that's valid. We got the inducement right here. Price came to take the inducement, came to the OTE zone. That's about it, guys. So go on the chart, test this out, see if this complements your strategy, and simply apply it. But always check the data. See if this really helps you with your trading. And that's basically it for me, guys. Hope you like it. Don't forget to join the Discord. We're dropping knowledge over there, as always. And yeah, peace out.